Hi, Bridget. Thanks very much for joining us today.
It's a pleasure, Mark. Thank you for having me.
Bridget, I mean, just tell me in simple terms, I mean, how much of an effect is the rand strength actually having on the real economy in South Africa? Because, of course, it's helped to lower inflation. But what has been the impact on the domestic economy?
Well, obviously, you've heard in the news that there's been a relative amount of unhappiness, specifically in our manufacturing and export sectors. It's really being driven by the concern around what the rand's value is doing to erode value in South Africa. But if you look at the bigger scheme of things, I mean, we are not alone. South Africa certainly is playing the same game that we're seeing in most other emerging markets. As you mentioned earlier, you've seen it in the likes of the yen, you're seeing it in the Swiss franc. So this is not a South African phenomenon. This is something that is being driven by demand for yield, demand for equity, and looking for other sources of income or some form of yield return that we're certainly not seeing in the bigger G7 states.
And as interest rates, remain at 6%, and, UK rates are 0.5%, US rates are low, Japan rates are low. I mean, it's a bit of a no-brainer, isn't it?
Absolutely. I mean, if you think that the rand has strengthened to the extent that it hasn't done so in a totally unorderly fashion. And I think that that's one of the things that has certainly been very attractive for investors. The movements in the rand have been monitored and managed. You've got a good outlook in terms of where the rand is likely to trade on a much stronger bias. This has been and continues to be the outlook for the foreseeable future, certainly. And whilst our exchange rates remain relatively attractive, it certainly looks like the rand remains on the stronger bias of that curve.
Is it going to go beyond 7 per dollar? Is it heading in that direction, do you think?
Well, it certainly looks that way. I mean, if you see last night, we saw a lot of intervention out of the likes of the South American emerging markets. It's very, very short-lived. And unfortunately, what it really does is it offers the opportunity for traders just to get in at better levels than they were able to do previously. So I think that whilst interest rates remain at these kind of levels, whilst we still do offer opportunity, and certainly whilst the international community is looking for investment into Africa and looking for a high-yield carry, we certainly are going to see further strength in the rand.
Is that it for interest rates, Bridget? I know the bank intimated as much last week. I mean, is 6% the floor, do you think?
Look, obviously there's very big risk to the downside purely because the inflation target of the Reserve Bank has been met. We're currently looking to trade possibly close to the bottom side of that inflation target, closer to the 3% barrier, which opens up the debate around growth and whether or not that 6% interest rate is effective enough in order to sustain growth in South Africa. And I think that's really the big debate that's going on at the Reserve Bank currently. Whether or not we'll see another interest rate cut is anybody's guess right now, and the market certainly isn't pricing it either which way, although I think the risk certainly lies to the downside that we may see another 50 basis points in November. A lot of analysts, especially around this rand discussion, have said that another 50 basis points could potentially support the rand.
OK, Bridget, thanks for joining us today. Bridget Taylor there from RMB.